Hey everyone, and welcome back to Everything Tesla Stock. Are you thinking about buying Tesla stock? Well, it's that time of year, harvest season. And what better way to celebrate than buying Tesla stock? Well, the good news is that the 3-for-1 stock split is going to go live on the 25th of August 2022. So now might be a great time to get in on the action. In this video, we're going to show you the rationale behind Tesla's decisions to go ahead with the stock splits and whether or not it's a good idea to buy shares before or after the split. At the time of this video, Tesla's share prices are hovering at around $890 per share, so there's definitely some speculation going on as to what the next price may be. Anyway, in light of all this speculation around Tesla stock, we just want to make sure that you guys have got an opportunity to hear our opinion on this matter. So make sure to watch until the end to find out. And with that, let's jump into the video. But right before we get into it, if you like this type of content, don't forget to like and subscribe to the channel and turn on notifications to keep up to date on everything going on with Tesla. Since Tesla's shares split just 2 years ago, many people were surprised when the company announced earlier this summer that it intended to do a stock split. But it's clear that the additional split was agreed by both shareholders and the Tesla board of directors, as the 3-to-1 split was formally approved on August 5th. While the split is still a few days away, there are two crucial dates for those who stand to gain from it. The crucial dates for Tesla's impending stock split are as follows. Wednesday, August 24th, 2022. Just 1 day before the shareholder of record cutoff, Tesla shares will split. After the stock market closes on August 24th, Tesla shares are going to be divided 3-to-1, and stockholders of record will have 3 times the number of Tesla shares in their portfolio the next morning. Thursday, August 25th, 2022. This is the first day that the split-adjusted Tesla shares are going to be traded. Keep in mind that Tesla shares will begin trading at a 3-fold discount to keep their closing price on August 24th, because the split is 3-to-1. However, Tesla's entire market cap is going to stay the same because there's going to be 3 times as many shares, and the number of shares outstanding is going to rise to 4 billion. The Tesla stock split is considered as a method to enhance demand for its shares. At the time of this video, the price of Tesla stock was at around $890, with a 52-week range of $620.57 to $1,243.49. Tesla has increased by 23% over the past year, while falling by 18% since the beginning of this year. As soon as the stock starts trading on a split-adjusted basis, then it's going to be interesting to see how the price responds. On the 25th of August, the stock of Tesla is going to start trading on a split-adjusted basis. Tesla's stock price increased by roughly 43.5% between August 2020 and June 6, 2022, following the company's previous stock split. According to Tesla's most recent quarterly numbers, the company's overall sales have increased by 42% year-over-year in Q2 to $16.9 billion. The company claims that growth in car deliveries, an increase in the average selling price, and growth in other areas of the business have all had an influence on revenue year over year. According to the SEC filing, only shareholders who own shares at the market closing on June 6th were eligible to vote at Tesla's 2022 annual meeting of stockholders on August 4th, 2022. Retail investors like stock splits because they enable them to expand their portfolios and attract a fresh group of investors. The stock split will also make the stock more accessible to retail shareholders because they have shown a significant level of interest in investing in Tesla stock. Tesla shares are held by Elon Musk, 23.5%, and the Vanguard Group, 6%. Tesla announced Q2 profits in July that exceeded expectations. The following day, shares rose 10%. In advance of the news of the anticipated Tesla stock split, they've continued to rise. For the first time since May, Tesla shares surpassed the 50-day moving average on July 8th. The current attempt to get over the 200-day line is encountering resistance. Stock is still very much needed below previous highs. The 200-day line is proving to be a hurdle for Tesla stock. After news broke that Elon Musk had sold approximately 8 million shares recently, the stock price increased by more than 2% on August 10th. Before an anticipated court battle over his contentious arrangements to purchase Tesla, the sales gave Musk almost $6.9 billion. That's from Twitter. The time to buy Tesla stock is not right now. According to MarketSmith chart analysis, shares are in a lengthy consolidation, with a 1,208.10 buy point on a daily chart. For ambitious traders, a narrow trading range around current levels may result in a different entry, but the stock needs more time. So, how do stock splits work? Well, a stock split occurs when a corporation divides an existing share into a number of fresh shares. A 2-for-1 split will result in a 50% decrease in share price, but a 100% increase in the number of shares outstanding. When a share price has climbed significantly, businesses frequently divide their stock. A larger group of buyers can be attracted by the split's reduction in stock price. Previously unable investors might suddenly succumb to the temptation. A split, however, has no impact whatsoever on the company's existing worth. Reverse stock splits may be employed to lower the number of outstanding shares. Reverse stock splits are frequently announced by financially troubled companies in an effort to boost share prices and also keep their listings. A corporation that is currently priced at $5 a share can therefore start a 1-for-2 reverse split, which is going to raise the price up to $10. It would be 50 million shares of 100 million if the corporation had 1 million outstanding shares. The stock splits can have a number of effects on your investment. After a stock split, the monetary worth of your ownership will be the same. You'll simply have more stock. The same concept holds true if you possess fractional shares of a corporation. If you possess half of a company's stock and there's a 2-for-1 stock split, the shares will be double, and as a result, you would own the entire shares. What if you have a dividend-paying stock? Following a stock split, dividends are usually cut correspondingly per share to account for the increase in shares outstanding. Total dividend payments are unaffected. If you have an options contract on a stock split, it's going to be revised so that it's unaffected by the split. It will display the new price and share count, but the overall worth will remain the same. This is known as the being made whole process. In our 2-for-1 split example, an option contract that originally covered 100 shares at a strike price of $100 each would now cover 200 shares at a strike price of $50 each. Stock splits are regarded as bullish by many investors. However, a rapid succession of stock splits may occasionally be a signal to sell. Higher-priced stocks typically draw buyers willing to pay more for better-performing stocks. While that might reduce the pool of buyers, well, it usually increases the number of sponsors who are willing to back the stock with wise money. However, early stock splits frequently don't cause issues. After first splits, stocks can frequently, and they do, rise upwards, especially when they occur early in a bull market. However, issues arise when businesses implement several sizable splits in a span of 1 to 2 years, such as a 2-for-1 or a 3-for-1 stock split. Investors who are following the Tesla stock split should be aware that a 5-to-1 split was approved by shareholders in August 2020. The thought of more shares flowing into your account can be exciting, but don't confuse the number of shares with the value of your stocks. A stock split doesn't alter a company's total market capitalization or value. It divides shares into bite-sized pieces so that shares can then be traded at a lower price. The overall value of your shares will remain the same after a stock split. Until now, and especially in the previous 3 years, the Tesla stock split has been a wild ride. Its price on January 1st, 2020 was $130.11. The cost had increased to approximately $900 in the time since. However, you would have to have paid $1,144.76 if you'd purchased a Tesla share on November 1st, 2021. In reality, as a result of July 8th, 2022, your investment is down if you purchase Tesla stock at any point since September 2021. The prospects for the corporation appear to be divided among analysis as well. In June, the stock was followed by 45 analysis, and 12 gave it a buy rating. 12 more advised against holding the stock. It was underperforming, according to 6 analysis, and 3 of them suggested selling it. Investors might be tempted by a stock split because it gives them a chance to purchase a formerly more costly stock for a significantly lower cost. However, stock splits alone should never convince investors to purchase a stock. But do your own homework, look at stock charts to determine when to buy, and concentrate on businesses with strong fundamentals that are outperforming their competitors in terms of price performance. What are your Tesla predictions? Let us know down below. And thank you for watching. While you're still here, go ahead and click on one of these two videos on your screen. See you there.